Is silver the next massive earthquake in the financial markets? While the 2025 rally was just a tremor, we are now entering a structural shift that could change everything for 2026. The core of the story is a massive structural deficit. For the fifth year in a row, demand is massively outstripping supply. In 2025 alone, demand hit over 1.2 billion ounces, while supply lagged at just 1 billion. That 200 million ounce gap is roughly equal to the entire annual production of Mexico, the world's largest producer. Silver isn't just for jewelry anymore, it's the backbone of the green transition. Solar production alone consumes over 200 million ounces a year, and alongside EVs, 5G, and AI data centers, tech could consume half of the global output by 2030. Because of its unmatched conductivity, there is no real substitute without sacrificing performance. Turning on the silver tap isn't an option because supply is incredibly stubborn. About 70% of silver is mined as a byproduct of other metals, so miners can't just increase silver output if prices spike. Plus, new mines take up to 12 years to go from discovery to production, and global ore grades are steadily declining. What we have is accelerating demand versus crawling supply. This is the textbook definition of a multi-year tight market. While the green transition creates a price-insensitive demand base, the geological reality of mining creates a rigid supply side that simply cannot react quickly. After a massive 150% run, people are asking if the easy money is gone. However, the market is undergoing a re-rating. The old ceiling of $50 to $54 per ounce is now acting as a technical support base. This signals a regime change. What was once the high point may now be the new floor. Looking at 2026, analysts see three paths: a base case of $56 to $65 per ounce, a bull case between $72 and $88 if deficits deepen, and an outlier scenario of over $100 if investor inflows accelerate. In some markets like India, research even points towards silver reaching 2.4 to 3 lakh per kilogram. To profit from this, you have to think like an investor, not a gambler. You need to ask what role silver plays in your portfolio, why you're choosing it over gold, and which risks you're willing to respect. Experts suggest treating silver as a satellite position, typically 5 to 10% of your financial assets. It's a high beta asset that provides a powerful hedge for green energy growth, inflation, and geopolitical uncertainty. Remember the difference. Gold is a pure monetary store of value with lower volatility. Silver is a hybrid strategic asset. It gives you exposure to the new economy supercycle and historically outperforms gold in bull markets, though it comes with a much wilder ride. You must respect the volatility. Expect sharp 20 to 30% corrections as normal market noise. Watch out for policy shocks like changes in export rules or margin requirements, and keep an eye on global economic slowdowns that could temporarily dampen industrial demand. The initial re-rating may be over, but the structural story is just getting started. Silver is an irreplaceable commodity powering our future. Approach it with a long-term mindset and position it strategically. The market never sleeps. Follow Z Invest Z on YouTube and Instagram for more smart investing insights and to stay ahead of the curve in stocks, global macro, and precious metals.